Hello, Scott Bear here, Mortgage Pro. I am part of your real estate success team here at Realty Pro, and I am here to make you successful. Right now, the rates are doing very well because of a report that came out on Wednesday. I'll get into that in a second. 30-year fixed rate, 4 3/4. 15-year, 4% even. 5/1 ARM is at 3 1/4. The 7/1 ARM is at 3.625. FHA is at 4.5. VA at 4.625, and USDA at 4 3/4. Now, ADP came out with a report on Wednesday that so far exceeded expectations. They basically helped create some great rates that have taken place here on Friday. So let's give ADP a hearty whoop whoop. So ADP came out with a report saying that 297,000 jobs had been created in December. Now, this so far exceeded expectations of 100,000 jobs being created that it raised the bar extremely high as far as the actual jobs numbers that came out today. Now, the jobs numbers today came out at 103,000 jobs being created. Expectations were actually about 150. Now, that expectation had been revised upward because of ADP's number that came out on Wednesday. Now, private sector jobs came in at about 113,000 jobs being created, and expectations were 162. Now, these numbers might sound a little bit more disappointing because expectations were so much higher than the actual numbers that came in. But in actuality, those numbers show a slight improvement and show a continuing improving trend in the jobs market. Now, these numbers might have been received a little bit more warmly when the numbers came out today, but because of ADP's numbers setting the bar so high, the numbers were actually received somewhat disappointingly by the market. So the rates reacted accordingly, and we saw some marked improvement in mortgage rates. So, like I say, thanks to ADP. Now, this gap was a little bit more widened by upward revisions that happened with the jobs numbers in the past 2 months. Another 70,000 jobs were actually created over the past 2 months, and those numbers were revised. So that gap was a little bit more widened, and those numbers were easily more disappointing when they came in today. So that kind of leads me on to talking about the volatility in interest rates and needing our borrowers to lock in their interest rates. It's very important, especially in this climate of volatility, that interest rates are taken advantage of, and the great rates that we have today, that they're locked in. A pilot once said that he would much rather be on the ground, on stable ground, wishing he was flying, rather than experiencing a problem in the air and desperately wishing he was on the ground. Well, the interest rates are kind of the same way. Wouldn't you rather be locked in at a fantastic rate and then perhaps maybe later wishing you were floating, rather than floating your interest rate and then watching the rates wildly go out of control, unable to gain any footing, and desperately wishing you had locked? Right now, we need to encourage our clients in this manner, make sure that they're making good decisions. Have your clients give me a call. I can explain the finer nuances of financing, explain to them some very good information that will enable them to make good decisions and feel good about their decisions. And let's get some of these clients off the fence, and let's create some more transactions in this difficult economic climate. Hey, I wish you guys a great new year. I hope it was great. I wasn't able to wish you a new year last week, so hope you had a fantastic new year. I hope you have a great weekend this weekend, and we will talk to you on Monday. All right, bye bye.